TGIF Warriors NFP Day. Hi, Mary. How you doing, Paul and Bran and Alexander team? How's
Morning, Dale.
how's the dream team doing going into the end of the week?
Let's rock and roll.
Huh? You want
Let's
to?
rock and roll.
All right, let's do it.
You know what? Ryan's just excited to see the United
What?
States win tomorrow. That's all he's excited about. We know, Ryan. We understand.
Who?
The USA,
I don't know.
baby.
I
USA,
don't
the
know.
red, white, and blue. Rock and roll, man.
I don't know. Come and see us when you play a proper sport.
It's all right. You can call it soccer. We understand how you feel.
Listen, you managed to draw against the next World Cup champion, so you know Kent tells lucky that's as good as it gets.
All right, so I want to ask Kman and Ryan about this level here in the end.
Good
There
morning.
is some confluence. Both the dollar and the yen are challenging their 200-day, and well, dollar's underneath it.
Yeah. Good
And
morning,
right.
Dale. Good morning.
Hey, hey, Kay, how are
Good morning,
you?
Kay.
Very good. Thank you.
What
Big
are you
fib levels.
thinking?
Well,
What do you think? Trade big levels?
yeah,
Okay. Isn't this a big level?
it is. It's we're at the on the dollar index. Yeah. We're at pretty big levels in a lot of pairs. On the dollar yen, on the euro dollar, on the cable. You name it. Aussie Kiwi.
Yeah, everywhere.
They're all on big levels. So not surprising that your Dixie Chick is on big level as well. So
Yeah. I remember Katie was talking 102 when I had her on. Maybe that's what they have to do is flush everyone under this line. I think a lot of people that were still bullish a dollar may capitulate under this.
yeah, I mean, but we have to look at the yields are telling us exactly the same story. If we would be sorry, holding better in yields, we could say like, okay, let's get the flush and then pick the other side. But yields have been slipping quite a bit as well. So exactly, that's where we are, and that red line is also coming in here. We have about the same that we are looking at. So yeah,
A
it's
lot of people
dangerous.
calling this a major breakout in bonds. If you take some
Dangerous
type
waters.
of downtrend line here. So, yeah.
Yeah, dangerous waters for the dollar if we get a bad number. Yeah, and dollar yen, as you were mentioning, we're below that 200 DMA that a lot of people were watching around 134.5. There's decent support coming up though in the low 133s towards 132.5. Decent support, let's put it that way. But if we get a really bad number, I'm afraid that 130 could stare us straight into the white of the eyes.
Can I throw that up now?
Why is Canada holding up so well? Dollar on the verge of, we've had false breakouts both ways, right?
Yeah,
Then it looked like, this was a false breakout, and now this is a false breakout. But why isn't Canada down here already with what Aussie has done, what the dollar has done?
yeah.
It's kind of an anomaly, isn't it?
No, because I think, and I tend to trade it a little bit that way as well, because I think the market, a fair bit of the market is looking at Canada, mix, for instance, as well as the dollar block. So the US,
I see.
America, since they are the closest neighbors, people trade the Americas. You put the dollar, the Canadian dollar, and the Mexican peso a little bit in the same basket with their own.
Never heard that before. I learned something today. So yeah, that's interesting.
Really, I've been short. I've been short for a long while, Euro mix, and then tried Euro Canada as well before the dollar turned around. And if you look at the Canada and the mix crosses, they follow pretty much the same path. So there's a bit of correlation to
the US dollar
as well. If you don't want to trade pure dollars, for instance.
Okay. Yeah, that's normally what I trade. Ryan, I think you were trying to say something.
Yeah, I was just gonna, if you want me to pop up a quick picture of the dollar yen chart just to see what big levels we've got there.
Pop it.
Where is it? Hang on. Oh, look, where's it gone? There.
Yeah, okay. Yeah.
Got that there?
Right,
Yeah.
kind of right there. This is a big level, isn't it?
It's two big level because it's measuring both the big legs. You know, the first leg from the 102s and then that second leg from the 115s. You know, these are the real big levels you've got to watch. If this trend is turning, if we've seen a peak, which you know, looks like it's a peak when you got a 152 high and we're 134, but when you look at these bigger pictures, those are levels, you know, that make or break a trend. If we bounce off of there, we could be 137, 140. Who knows? So
correct this recent collapse. And what are we talking about? 1,800 handles. Why can't it rally back 8 from some point? Is that what you're saying?
Yeah. Well, we've done 500 since Powell. You know, so there's scope. As much as I think any good data is going to get sold heavily, it's Friday. We've had a big move already. You know, you've got to expect maybe a bit of profit taking. If the number's good, we could get a significant bounce. Then perhaps next week we get back to selling it. Who knows?
I like your charts. I always turn my black light on in my office when you put your charts on up.
Hey, Ryan, I was going to mention, and good morning, guys. I was going to mention, how about I mean, this has been a very, very big move in the bond market. I mean, we've seen yields really collapse here.
Yeah, but then you've got to keep an eye on this 2-year. You know, the 2-year is the key, and you know it's having a little breakout now, which is a bit significant. But this 2 years is roughly reflective of expectations for the ceiling. So if it's sitting in a 4.25, you know, 5% mark, it's nailing what is expected from the Fed. But now we're getting a bit of a break. That's the market drawing down those ceiling expectations. Are they right? Are they wrong? We know the Fed has said, we know Powell said, Fed members said that they're likely to raise the ceiling, but the market is trying to second guess them.
Doesn't believe them.
It sees the shocking ISM, it's seeing all the PMIs, it's seeing all the other data turning negative, and it's saying, yeah, fat chance you're getting to your ceiling, mate. So the bum fight is on, and this is what we need to trade.
Yeah, maybe Paul changed his tune because of he's following the market. You know, that, you know, why should he, you know, not talk that things are going to moderate when things were already moderating ahead of him?
True, but the problem, but the problem he has is that the market does a lot of the Fed's job for it. If the market thinks rates are going to 5-6%, it tightens financial conditions, which helps the Fed. At the moment, it's doing the complete opposite, which is why I found it a surprise that Powell didn't fight that more the other day, because the market is just undoing all that good work.
I'm mad he was so nice.
Don't get mad, get even.
All right. Oh, I'm trying to do that this week too, buddy. So, Stel, how you doing?
Hello. I'm good.
So you get your add-on in silver? Wow,
I got a little bit yesterday, but really haven't got much in yet. I'm waiting for payrolls today for confirmation. But you know, talking about rates and the terminal rate in the Fed, we were looking at on the flow show at Fed Fund Futures what the market's pricing, and we're pricing roughly 4.85 as the terminal rate in for the Fed. So that's basically 100 basis points from here, 250s, because at the moment we're 3.75 to 4%, right? So roughly that. And then most interestingly is that by end of next year or January of 2024, we have 50 basis points of cuts priced in. And then, so that's the interesting part. Yeah.
The recession scenario then.
So what do the central banks do when recession hits? Because I think it's most likely it's going to hit. All the leading indicators have turned. Housing is turning. It's not a good picture. So what do? Do they go back to the old normal where they let markets find their own balance, or do they go in and then cut rates to zero and do more QE? Because this is what they've been doing from 2008 onwards. Yeah,
maybe they just let the dollar fail. That does some of the job for them. It's kind of stimulating. So maybe they don't have to cut as much with a weak dollar as they would have to cut with a strong dollar.
Yes, true. Let's see. We were discussing this on the Flow Show again this morning. It was the old normal versus the new normal. If you take a, excuse me, if you take a medium-term view on equities, on bonds, or everything, you're basically betting on if the Fed is going to go back to its recent ways of QE and zero interest rates when things turn sour. Will they? It could be different this time. At some point, maybe they're going to say, right, we have to let the market find its own balance. I don't think this is going to happen. This is what they should be doing, but I don't think they're going to do it. First sign of a proper crisis, I think they're going to be cutting like crazy again, going back to the.
He might already be worried, and that's.
Hey,
don't you think?
Hello. Can I just jump in here really quick? You think
what your name, please, sir?
Hello, my name is Blake Morrow. I'd like
to. We've all heard of you. Your reputation.
I want to ask, because we always go to this time is different, right? Like this time is different. This is this time different, and the reason why I asked that is because we're now in a, obviously, a higher inflationary environment that we've been in like 20 years. So do you think really they're going to go back to their old ways? I don't agree with that, because I don't think we're in the same world that we were in for the last 20 years. But
you're right. Inflation wise, we're not. But I've said it before, I think inflation is going to start dropping dramatically in the first quarter of 2023. So when inflation goes down to something like 3-4%, which it will, I think the Fed's going to have a lot easier a job of justifying cutting rates and doing the usual crap. I don't think they should be, but they're going to have a much easier task of doing it, because I do think that inflation is going to drop. Okay. And we're seeing already, right? We're seeing year-on-year numbers today. We had the PPI. I think it was Germany PPI, was it? Let me check. Eurozone PPI, down from a previous reading 41.9%, 30.8%. So these are big steps lower that is taking. This is going to lead to inflation dropping. We've talked about it for ages, that the way it's calculated, it means that by definition, February, March next year is going to be dropping. And I think inflation is higher than it used to be. Of course it is, but I don't think it's going to stay at these levels, not even close. I think it's going to drop to, it's not going to go back to 2%, but it's not going to be at double digits. It's
so
going
again,
to be
here's the point. It's not going to go back to 2%, but we're in a different world and we're a different regime. So are we in a different place where the central banks are not going to be able to react like they once did? And I think who did you say his name is? Greenspan?
Yeah.
I do think that Powell realizes how dangerous this regime of, zero interest rates is for not only for the United States, but for the rest of the world too. So I don't know. But hey, Dale, let's ask you the question. What do you think? What do you think we do here ahead of the jobs report?
Gosh, I don't know.
Pray?
Trying to guess these numbers. I already got Powelled this week, Blake. Taking
you got Powelled.
Before.
I got Powelled too.
Yeah, I got Powelled. I think it's still possible that we pull back from this trend line in S&Ps, and I think there's a possibility the dollar tries to rally today.
I started selling SPUs actually 3 points ago, yesterday. So basically, I started selling yesterday, and I'm inching my way in, because this is, I'm just going to say this, as a trader, we don't, we can't control anything. Obviously, we can guess, and we can say, we can think what we want to think, but really the only thing we can control is risk and reward, right? So that's it. When it all boils down to it. So when you take a look at the S&P, and we're right up against channel resistance, and we're yes, we're above the 200-day moving average. We got a lot of systematic momentum traders and institutions chasing the market the last couple of days. They haven't been paid. They bought above the 200-day moving average. We're sitting at the same spot, right? Yeah. What happens if we turn lower from here? Anyway, but all we can control right now is our risk reward, right? So like, here's my risk above the 50% retracement, and reward is somewhere down here, and that is a good risk reward, no matter how you slice it. if you go to, I'm going to show you guys this really quick.
Great coaching, Blake.
Well, those of you that are not ForexAnalytix subscribers, you don't see this, right? So
you coach people all the time in the room.
Yeah, but look at this. This is 7 years of data of different patterns, and this is just by the book stuff, but it's not just by me, but these are we put in patterns in play for the whole team, right? Everybody, well, most of us, put them in. Take a look at the winning percentage, 52% over the course of the last 7 years. So if you come to the market thinking, oh, I'm always going to be right, it's not correct. But notice what the risk reward is. The average risk reward ratio is 3 to 1, 3.4 to 1, right? And you can see the total return, all that other stuff. That doesn't really matter. The point of the matter is, I know that I've got a 50% chance of being wrong. Maybe less, maybe more, but my risk reward is there. And that's all we can control as traders, right? And so right now, for me, I've been waiting patiently for the last couple months. And you guys know this. I've been very long risk for ever since we did this false breakdown down here at 3,500. I've been long risk, since
the summit.
Since Trader Summit, right? Just trading it on the long side, as most of our team has been, and most of the ForexAnalytix community, we've just been trading it on the long side. I'm shifting gears this week. Will I be wrong? Yeah, maybe. But this is the place in this current environment, in the macro environment that we're in. This is the place where I want to be short risk. And yes, we have seasonals. Yes, Santa Claus can still come. Yes, there's a lot of risk that, but there's risk in everything you do. But we know that the risk versus reward here is worth taking. That's my view. And that's why I'm already starting to step in short S&Ps. And I know where my risk is. And it's definitely not above yesterday's highs. It's higher than that. So you have to be able to start, when you start shifting gears, especially from a longer term perspective. Ryan, you know what it's like. You trade a lot of long-term trades in the FX market. How do you position in the markets longer term, Ryan?
I look at the levels, the big levels, like I'm showing on that fib on dollar yen. But it's also part of sometimes letting the levels develop. I mean, Aussie dollar, I've been in that since October. Yeah. Buying down into the lows, into the 60 level. You want to see that you get a low and then that low's held thereafter, because it's been one-way traffic in the months prior to that. And it's a similar pitch in other pairs. And that's when I start thinking, right, I have an area I want to start scaling in. 60 is obviously going to be a big psychological area. That's going to be my assessment point. I'm happy to start building from here to 60 and then see how we go. Assign the risk across a wide area. Have a disaster stop. So at the very least, if something goes screwy, you're covered. And then you just build, but you can sit and ride out the noise. I've ridden out all that noise. Since those lows.
Question is, a question from one of our viewers: how do you avoid cutting your winners early? And that's that. I was, and Ryan, I'd love to hear your answer on this. But for me, if you take a little bit off, whenever you start wiggling into a trade, and you piecemeal it in, you might have 2 or 3 different positions, getting on the long side to quench that insatiable thirst of taking profits. That's why you have multiple trades, so you can actually pull a little bit off and then move your stops to break even on the rest and just stand aside. But what do you do?
Yeah, exactly that. I took some profits on the Aussie long when we got up into the 67s, purely because of that strong move after the CPI. I thought, right, let's take a bit off the table. I've added back in at 68 yesterday. But you're right. I see a lot of people in our room who get out of trades too early. And part of it is, if you're in the US, you don't have a choice in the matter. It's get out or nothing. But for us who can slice a position up, so we can cut a little bit, like you say, if you get a move up to the resistance or support point where you've got to ask a question, you take a bit of profit off, and then you bring your stop up behind it. Slice and dice, we call it. I try and sit in a trade as long as I can. I wanted Powell to give me better levels in dollar yen. He didn't do it. I got in at market short at 138.80. I'm still in that because cut a little bit off as it goes, bring the stop down behind it. I want to stay in the trade. I don't want to get out too early.
Yeah. I have a tip. I have a tip, Blake, that someone gave me. It's not, I learned it from someone else.
Yes.
Say you're long and you're tempted to, and you take partials along the way.
Like you're long S&P. You're taking some partials along the way here.
Okay. So in any position, you're long and you're taking partials and you're tempted to get out of everything. Ask yourself this question when you're long. Would you reverse out and short it? Same. And if the answer is no, you walk away and keep the trade on.
There you go.
Amazing. Yeah.
That's great.
I remember you said that before now. It's absolutely spot on. Absolutely spot on.
Yeah. Hey, I really want to hear from the rest of the team regarding this, but I looked at the clock. We have actually 9 minutes until jobs report comes out. I'd love to hear just some of the best ideas right now. By the way, this is the ForexAnalytix chat room. If you guys are in the chat room listening in, jump on Jumbotron and say hello. I want to ask. Let's start with Kman. Haven't got a chance to say sorry about Belgium, buddy.
Don't worry.
In the chat room.
Oh, you found time today, though, didn't you?
Oh no! Don't worry about that.
All right, sorry. All right, hey, Kman, what is your best setup for today? Following jobs report, good, bad. What are you really looking at?
Bad. I think dollar yen will probably be the one that gets another slap if we break in the 10 years up 347.48.
Yeah.
If you get a really good one, I like to think that cable may be decent for a return down to mid 121s for a starter. Euro may drop back a little bit as well, but I'm really going to let those yields be my guide because they are going to decide whether a good number, the dollar can really pick up a lot, or it's just going to be a sell or rally again because the doves or the bearish dollar people are just too strong right now. So
and this is the yield you're looking at the 10-year, right?
Yeah, we're there, right? And it's dangerous. There's a trend line as well. Dale had the same around 347.48 or something on the 10s. That's the one. And then there's a big level on the 2s around 4, and then 435 the other side. So I think dollar yen is going to be a mover, whatever happens. On the rest. For a change, I'm going to leave Aussie and Kiwi alone, even though Kiwi is still very, very strong, still a fruit full of vitamins.
I was going to say, hey, Kman, you were just talking about the Kiwi. I mean, the outperformance, and we talked a lot about this yesterday, on our private shows that we do, the Morning Edge and the Daily Roundup for the ForexAnalytix subscribers. I was like, man, you got to be very careful of Kiwi outperformance because this Aussie Kiwi just absolutely crapped the bed this week. It broke a big long-term Fibonacci level, and you're right, Kiwi's been full of vitamins. So sorry, I just had to mention
about the Aussie Kiwi and the Kiwi for actually a few weeks on the Flow Show. So
I mean, look at that.
I wrote a part of it short, and I took my profits a bit too early. So I'm going to listen to Dale's advice and just if it goes your way, let it run.
There you go. Great. All right. Hey, appreciate it, Kman. Good luck today for non-farm payroll. We appreciate you in the chat room and putting out all the news and everything else. Dale, you kind of gave us your thoughts. Stelios, what do you think? I mean, we've seen this big, huge move in gold. Yeah. What do you want to do in following the jobs report? I mean, gold's above the 200-day moving average. Look at that.
It is on a weak number. I'm buying silver more.
Okay.
On a strong number, I'm selling the S&P. As simple as that, because the S&P is at strong resistance. So
you want to join me? You can join me ahead of time. Just go ahead and sell it.
I'm not doing anything before.
Be my
sorry.
friend. You know, misery loves company, buddy.
I'm a chicken.
Misery loves company. Don't be chicken. All right, Ryan, what's your best idea today?
Well, I'm going to be managing my dollar yen short. I'm going to be looking at that fib area, potentially if it becomes a stretch point on a bad number. You know, play the levels. That's what I say. Look at we've got some big levels around in FX. They're the ones you want to keep an eye on. If they break, then you're off. If they can't break over whatever number, you know the trade.
All right. I appreciate that, and I'm glad you're watching this dollar yen. As you know, I tweeted about it that we're below the 200-day moving average for the first time since since 2021. I mean, that's crazy, right? It's nuts. It's a really big move to the downside. You know, I just got stopped out of a trade overnight. I was playing this the dollar Swiss, just really close to the support. It's been a really big support, but I knew that we were breaking lower, and I played it on the short side. I played, and I was like trying to be a little cheeky here and picking it up ahead of the jobs report, thinking, oh, we might just bounce right back before the jobs report. It actually, what it's done, it's taken out the stops pre-jobs report. Now, in the event that the jobs report comes in strong, I would be looking to buy this back above 94 cents because, this would be good enough. Whenever I get stopped out, I keep my stops pretty wide because I'll trade, lighter. And unless I'm going really aggressive with the trend, like if I see a big breakout and I'm, I've got the data going behind me and I'm really getting aggressive going in that direction. My trades tend to be a little small when I'm counter trend like they were. But when I get stopped out, I sometimes get stopped out at the low, or at the high. And in this case, I got stopped out overnight and I'm like, I wonder if they just, took me out, not just me, but anybody else out just to rally back. So if we get a strong piece of data today, that dollar Swiss, I think, goes right back above 94 cents. And then we could get a little rally here. And I'm just giving you guys that little, tidbit of information because like I said, when I get stopped out, it's like, it's questionable. Usually somebody was, feels like the market was fishing for that. One of the other things I want to point out today, if we get some strong data, is the dollar Mexican peso. The dollar Mexican peso has been in a really, really strong downtrend, but you can see this week, we've made some really big probes below the critical 1925 level, 1924, 1925. You can see this green line right here. If the dollar Mexican peso gets back above this 19.25 by the end of the day, I think that's going to be a hell of a squeeze. And we also have to watch the dollar Canadian because the dollar Canadian has not moved with this. And Dale, you and Kman were talking about it earlier, hasn't moved with this dollar weakness. And I think one of the predominant reasons why the Canadian hasn't moved is if you guys have not seen the Canadian yen, it has been breaking down in epic proportions this week. We've been talking about it breaking down once it broke this support right here. And let me just take you over to
CAD jobs as well today.
Yeah, well, that's the thing. We have Canadian jobs, so this one could
90
be
seconds.
Real big mover. All right. Anyway, we've been talking about it just breaking down through here, and it's been a nasty one. So anyway, a lot of great setups today. Let's go ahead and thank you, Stelios, for the heads up because I would have just kept talking a little bit. We have gold. The dollar, I'm actually going to put up yields here. So let me put in the US 10. I'll put up yields here, and I'm going to put the dollar index right here. And let's put that on a 15-minute chart. And let's all right, there's the dollar index, and let's go over to ForexAnalytix. We're going to launch Data Flash, which is a tool that you get with ForexAnalytix. Let me put that over here, and then
cheaper than Bloomberg.
It is a little faster than Bloomberg sometimes. Oh shoot, I got two of the dollar index. Hold on, let me put in the S&P here.
Quick, Blake. 30 seconds. 30 seconds. 25 seconds.
Don't freak me out, man. I'm good. You're good. All right. So we got the S&P. Let me get the data flash. All right, guys. Here we go. It could get busy around here. All right.
It will.
All right. Heads up, everybody.
No more bets.
No
Paul
more
knew
bets.
the number.
Rien
Paul
ne
knew
va
the
plus.
number.
Oh, 263 and revision higher as well. This is going to blindside a few
stocks
people.
Are getting absolutely
There's that
average. Look at
here.
average hourly earnings, 5.1 versus 4.6 expected.
I'm going to close out.
I wonder what Paul would say today.
Wow.
Anyway, yeah,
dude, I just
collar held where it had to.
45 points off the S&P short really quick. Boom. Boom shakalaka.
Nice trade, Blake.
Canadian unemployment.
Who cares?
Fell decently to 5.1.
Yeah,
right,
participation rates as well.
I'm done for the
day.
The most important thing. Have a great one. Wow, look at the dollar just absolutely creaming higher.
Blake,
S&P
the most important thing here is I've won the NFP competition second month on the trot. I think I had 262, same as last month.
Get out of here.
262 last month, 261 it came out, 262 this month, 263 came out. Champion of the year.
This guy is clearly rigging the competition, right?
He is. He's rigging it. It's such bullshit. Hey,
but he bets two ways. He bets two ways. He's short dollar yen, but then he puts a high NFP number. Come on.
Anyway,
hey, do you have a guest today?
Yeah, Tracy's with us.
Wait, we got
Tracy.
Oh, we have Tracy.
What? Tracy.
Hi.
Hey.
Hi, Tracy.
Hey.
Tracy.
Hey.
What was that song, Tracy? Tracy, when I'm with you. Anyway, something like that.
Oh my God. You're going to get serenaded right now, Trace. So, hey guys, gals, I just want to say thank you so much for being with us. You guys are in a real treat today. You got Tracy, Shy Girl here. She's going to talk markets. But make sure you guys check out the Trader Funding Program. I have an assumption that we had a lot of people just pass their assessment today in the Trader Funding Program as they were probably positioned that way. So very good. If you want to learn how to trade our money and not risk your own money and keep 75% of the returns, none of the risk, check it out. And you want to learn how to access larger amounts of money, go to the Trader Funding Program. Check it out. I'll put a link in the chat box. Tracy, welcome. And Dale, have a great interview with Tracy. And everybody, thank you so much, ForexAnalytix team, for being here for coverage today. We really appreciate you.
And if you took Blake's S&P short, even on a mini, that pays your assessment for a $100,000 account. Okay, so anyway, yeah, nice trade, Blake.
Thanks,
Tracy.
Man.
Good morning, guys.
How are you, Trace? Trace, great to have you back. Pretty wild day. Actually, I'm going to share my screen here. Let's see if I can. No, Blake, you have to stop sharing it. Thank you, buddy. All right, so we have this. I want to start with energy, right? That's still your wheelhouse, right?
Yes.
Okay, I know you have expanded your universe dramatically over the years, but why don't we start with WTI? And I guess there's an OPEC meeting possibly this weekend. Where's your head at these levels down here, Trace? Low 80s, mid 70s.
We kind of had Biden come in and put a floor under this, right, at around 70, right? Because he said he would start buying back. So we kind of have a floor under this. I mean, really, obviously, the major trend is still down.
Yes.
But, I think, a lot of it has to do with greater recession fears. And I actually had a Spaces meeting that we kind of went over all of this, and it's my pinned tweet. If anybody wants to go review that, it was on Wednesday where we went over rates and everything and oil.
So the recession outlook kind of clouds.
So it's the recession outlet, right? And then we've got China, never-ending lockdowns and things of that nature. But fundamentally, this market is still very tight, and should China come back fully, which probably won't happen until say March or so after the Chinese Lunar New Year, that's in February. You know, that will bring back another 800,000 barrels per day. So fundamentally, this market really hasn't changed. What we have seen in open interest is there is none. And we've seen
people
a lot
don't know what to do.
We've seen a lot of longs, you know, if you look at the COT reports, the FTC, you know, a lot of longs have liquidated, but shorts really haven't done anything. So we just really have people not really interested in this market right now.
Okay, so actually he was waiting to refill at 70. My bet is that the market front ran President Biden, and he's not going to get his 70. Pretty good week we're putting in. So do you think a weaker dollar? And I also want to acknowledge that the last time you were on, the dollar had peaked, I don't know, around 112. And I asked you about the dollar, and you said, oh, I wouldn't be long the dollar, even if there's another high or so to come, which is quote unquote from 3-4 months ago. And we had that new high, and then we basically, it's been a pretty good crash until today.
Yeah, I mean, absolutely. And if you look, you know, really the dollar's been driving this entire market, right?
Yeah, it has.
You know, it really
always
has.
does.
If you look at the indices, you know, ES in particular, the S&P, really, it's been singularly driven by the dollar. You know my feelings on the dollar correlation to crude oil. It's not really that correlated.
Yeah.
You know, because we've seen higher dollar and higher oil at the same time. That correlation over time is, you know, it's definitely not 1-to-1, especially when you have, you know, a fundamentally tight market. That said, it is very correlated to gold. And that nature. And so, you know, when everybody thought gold was dead, we're already like just above the 200 day, or was.
Yeah, look what's containing it. Everyone's looking at the 200 day. You know, look at the 200 week. It tagged it. That's a 50
perfectly
week.
Right.
50 week. Yeah, but it looks pretty good, Trace. I mean, you know.
Yeah, I mean, it looks like, you know, we had a nice consolidation there at the bottom for you know, a while. Here. And it kind of broke out of that consolidation. So that's, you know, it still looks very constructive.
I nominated this, Trace, as I gave it the, I know you do, you're probably in some gold shares, but Newmont was the candle of the month.
Oh, nice. Yeah, I have GFI and gold and and gold
and silver.
And silver, I have no silver position on right now. Okay. You know, but that has done extremely well. I had some calls earlier in the month that I got rid of already. Probably should have held on to those.
Yeah.
Well, but it was profitable, so that was good. But, you know, I mean, silver for me, you know, unless I see something really breaking out, it's, you know, it's a very volatile trade. That's why I prefer kind of calls over trying to trade that outright.
Okay.
Because it is so whippy.
Yeah, here's your gold silver ratio. I thought it was going to break out. Here it did, and one more jiggle. It's still a wedge.
It's still a wedge. I mean, it still looks good, in my opinion.
Yeah, you would buy this chart, wouldn't you? Try and buy this chart?
Absolutely.
And I think that means silver will underperform.
Yeah, but I mean, kind of this week we had kind of got a clues. I mean, Powell was kind of dovish a little bit for him for the very first time at Brookings when he spoke on Wednesday, right? And we kind of saw, you know, rates fall, dollar fall, which is, you know, very good for gold.
Yes. And but not so for the market. And, you know, this is the first time. I mean, we had this huge day with Powell, but the dollar weakness definitely has helped this rally
Oh,
over,
absolutely.
you know, so the dollar is really the game. The dollar's good.
It's been
You
the
have
whole,
to be short.
yeah, I mean, it's
How-
really been the whole, it's really been the whole market. So if
Yeah.
you've been watching dollar, you know, if you're trading the S&P, if you don't have the dollar up, you're missing a big piece of the puzzle.
Okay, so do you think with the S&P, based upon the outlook you were talking about on your pinned tweet, that the market's going to make new lows into the spring?
I mean, it's possible, you know, I would, you know,
Look at that.
I was thinking, you know, Q2, end of Q2, possibly we could see the low, but you know, I mean, I think you'll know, you know, you never really see the market bottom until you see real capitulation, and we really haven't seen that yet. And so the lows definitely, you know, might not be in. So, you know.
Okay. Would it change your mind? This is a trend line the whole universe is looking at.
Right.
The downtrend line in S&Ps.
Obviously, if we broke above that, you know, I think that, you know, then you have funds and CTAs and whatnot looking to get long. And so you can't really, you know, at that point you have a trend change and you can't really go against those flows because they're so big.
Okay, so maybe we get a pullback to 38, 37, but these lows hold, and then we try and break out. Anyway,
yeah, I mean, I would just be careful like the second half of December.
Yeah.
Because I kind of fear that repeat of 2018. Obviously, it's going to be, you know, obviously all eyes are going to be on, you know, the Fed decision, right? Whether it's 50 or 75. You know, the market's kind of expecting 50 at this point. So if we get a 75, that would be rather bearish for the market.
Okay, and what you still holding fertilizer stocks? Oh, and before I forget, Kman wanted me to ask you about how you're participating in lithium.
For lithium, I've kind of been in and out of that market. I don't really have anything on right now.
Uranium?
So I'm in Uroy still.
Okay, it had a big week last week.
Yeah, I mean, in all honesty,
it had a gap. What was behind this move here, Trace?
It's I don't know actually.
That's more bullish if you don't know. So I guess anyway. So would you continue
to buy? It's kind of been sideways though. I mean, if you look at this market, it's kind of been sideways overall. So that's kind of one of my ones that I'm just holding, you know, longer term. To be honest.
Anything in ags? I know you liked the fertilizer stocks for a while.
I still do. I think those are going to come into play not until Q1, Q2 next year. So, you know, they've pulled back quite a bit. So going into next year might be a good opportunity to start re-looking at those.
Okay, and you don't have to move forward with that recommendation you're going to give me to go work at FTX. I'll just pass on that. Any view on any view on Bitcoin?
No.
You never have a view on Bitcoin.
That's just not my market. So I don't.
Okay.
I don't really know what's going on with that. Sorry, crypto.
Well, it's a winter. Now it's you know, you live in Canada, you know, it's like in February.
So I know I moved.
Oh, where are you?
I moved back to the US. I'm in Florida now.
Oh, welcome back.
Thank you.
All right, so you wanted some warm weather in the beach,
right? I thought I'd go totally opposite.
All right, well, I hope that your new home, everything is great for you, and this change is great for you.
Well, thank you.
Anything you want to wrap with, Trace, that you know, your message going into the end of the year, what you're telling your subscribers?
I mean, and you know, if we're looking at the end of the year now, pay close attention to crude oil, because usually you know, although it's, you know, this hasn't been a usual year, but we have the SPR wind down, right? And then because December 31st is the tax assessment for how many barrels you have on hand, usually they try to slow production and get rid of as many barrels as possible, right? Because they don't want to be taxed on them. And so generally that tends to be pretty bullish because we have pretty big draws. So and that happens around mid-December into the end of the year. So just keep that in mind. And plus the SPR draws are winding down. And as we saw in this Wednesday for inventories, we only had a 1.4 million barrel SPR draw that was put back into commercial crude inventories, and we had an overall commercial crude inventory draw of 12 million barrels. So as those SPR draws start getting smaller and smaller, those are barrels that are, being not in the market anymore. And so we are already seeing bigger draws.
Okay. And, you look at the XLE, and it's almost like a different market because crude topped, on the invasion, then had a failing rally. And during that whole time that crude was on its way to where we are now, you had the biggest performer in the markets being oil shares. Can you explain that to us?
Absolutely. I mean, I think people find that that's been overall, even though the front month crude market has been rather weak, if you look at, a lot of these oil stocks, they've been undervalued, right? They were, at the worst, they were only 2% of the market, coming down from 20% of the market.
Right.
We have some of the highest dividends
that's part
of all
of
the
it.
sectors. So I think they're very investable right now.
Okay, it was a yield play as well as energy. So there were other factors. Okay, so do you think there'll be continuation? It's very crowded, this trade. Could it be vulnerable to a correction here with the market?
It could. It could if we start really seeing how bad of a recession is coming, right? And so I think that could spook the market, but so far they haven't, and there's still a lot of them are still well off their highs.
Okay, you're with Hightower now.
I started my own company. Yes.
Oh, is that the name of? Because there was a Hightower that was around forever.
Yeah, no,
different.
It's different.
Okay, well, God, a lot going on for you in the
I
last,
know, since we last talked, I have a ton of changes.
Yeah. So, that we're all fans of you here, Tracy, and anything you do, we're hoping for the best in both your new business enterprise, your new home, and, have a great holiday season. And
you guys too.
Really appreciate you coming in and edifying our community every quarter or so.
So absolutely, you guys are my favorite. So it's always a pleasure.
All right, Tracy Schuchart, and best place for people to follow you. I didn't see a link to your new company.
We are just getting up started. We'll launch after the first of the year. It's holiday season, so I will have a link in my bio as soon as the company launches. For now, I'm on Twitter, obviously.
Yes.
And also at macroinsiderspro.com. I do weekly write-up there. And then also at placeyourtrades.com, which is Anthony Crudelli's thing. I do also have a blog on his site, and I hold a spaces every Wednesday for them.
A lot of you guys are down there in Florida that you're working with, right?
Yes.
Okay. So you have people to, people. You move down there and know people. That's great, Trace. Yeah. All right. Well, Merry Christmas, Happy New Year.
Likewise.
Talk to you next year, Tracy. Enjoy, and thanks again.
Thank you, guys.
All right, Tracy Schuchart, my trading warrior sister. Follow her at Shy Girl. Join the team, and Blake doing cartwheels over his S&P short in Morning Edge, and that's in 25 minutes. I hope that we were able to add value to what you guys are trying to accomplish. If we're bringing in great speakers for you to do some intelligence gathering, and also have a home here if you want it. So that's going to be a wrap for the week. Hope everyone has a great weekend. don't just count your pips, count your blessings, and see everybody next week. Adios. Thanks, Trace.